Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Gouton. Jumping into the charts on this February 10th, wrapping up the week. Basically, what we saw today was the spiders finish slightly positive on the day after seeing an initial weakness and dip. The dip was primarily due to the NASDAQ. If we pull up the NASDAQ chart, the QQQ, we can clearly see that the NASDAQ basically finished negative on the day. It gapped lower. Yes, this was yesterday's close. It gapped lower and then ended up rallying and recapturing most of the lost gap, but still finishing down on the session. So clearly there was some weakness in tech, which we'll be discussing in our members exclusive analysis later this week. And in terms of the NASDAQ, you're still technically holding support. You're above this red pivot. You actually would have been better to have kissed it today and hit it to see what type of hold that is. But now the fact that you just bounced before it leaves this price action actually vulnerable to slicing through this support level. Notice how you're basically still trading back under this main trend line. You hit your resistance. You can actually even pull that up a little bit, but you see you connect through these pivots over here before breaking down. And then you're ultimately still underneath this main yellow COVID trend line. So that's the resistance. This is the support. We could chop in this range for a couple days, but really we're going to be waiting the CPI. The CPI is likely going to either break us out of this range to the upside or it's going to drop us out of this range. That's pretty much how it's going to go. Flipping back to the SPX, we can clearly see that on the S&P, you're still holding technical support. There's a clear trend line that I naturally would expect the markets to retrace to. So we would have to certainly pay attention to this white trend line. The fact that we haven't hit that yet leads me to think that we could potentially see a dip. Maybe it is a dip down on CPI. Perhaps, if the S&P fell on CPI, that would be about a 2% move. But it makes sense to naturally check back to this area of support to really see if this is a breakout that we can hold and build a base off to continue higher. That's typically how the markets like to work, and that's how I'm playing this. I'm basically expecting, I'm not going to put a expectation on it. You're just going to trade what's in front of you, but I do think it's a likely scenario we see a check back. Maybe even there's some additional fear on Monday that creeps into the market and it forces a sell-off into the CPI. Then that would be a pivotal area for the markets, because CPI, again, just like the NASDAQ, would either make or break this. It would either send it through the support, which is very bearish, or it would pop us off of that level to continue to potentially move higher. So right now, the markets are at a very close inflection point. That's why we have to look for other clues in the markets, which I'll be certainly informing my members of later this weekend regarding individual stocks. Now, if we touch base on the Dixie, the DXY, the dollar is looking pretty resilient, if I might add. This is a textbook, beautiful bullish consolidation. The fact that you're still inside of this initial wide range 3-bar surge. Notice how you tried popping out of it. They tried dropping you. They tried dropping you through it. You actually were through that level. And then it just came back on a power rally to close back inside of that range. And then you hit it again today to test that wick high support, and you bounced off of it, closing near the upper end of the range. So this consolidation, again, is probably going to break one way or another on CPI. This is technically bullish, which does favor more upside, which perhaps means CPI either comes in line or maybe slightly higher, which obviously could react the market. But whether or not, whatever the report is, it's really just the reaction of the markets and the money flow. So I guess speculating on the actual report is very difficult, because it's certainly something that could go either way. It's really a 50-50, but we're just looking for clues, and this is technically bullish on the dollar, which technically implies that if this pattern breaks to the upside, which it's looking more likely to do, then that could mean that the market takes it as a negative CPI print. Let's take a look at the 2-year yield. The yield market is extremely important. If we look at the yield markets, the 2-year yield just confirmed a technical breakout on interest rates. That's sending interest rates higher. Take a look at the 10-year, US 10-year, and the long end rates. Technical breakout. Interest rates are going higher. So there's a lot of levels that we're going to be discussing in our exclusive analysis with our members, but tons and tons of price action to certainly be aware of. If we take a look at gold, gold is looking extremely tired. Daily chart breakdown, you hit some near-term support, consolidated bearishly, broke that range with a beautiful hammer reversal, Now you're consolidating right at that low. You've pierced this level. So this level is looking very, very vulnerable in the near term. It's, again, most likely going to be CPI. I have two targets on gold, potentially both playable for a day trade, one a swing trade maybe. But in terms of gold, if gold breaks this pattern, you'll have some near-term support around this 1827 level. If it gets through that level, then 1788 inside of this massive consolidation will be the next level to watch. We did touch base on natural gas in its exclusive own video, but if we pull up that chart, basically natural gas is on watch for a potential breakout. It'll be interesting to see if we can actually get above this trend line. If you get above this downsloping trend line, then you basically get a move to this $3 mark and potentially higher if a short squeeze occurs. Let's take a look at the US oil chart, so WTI, flipping to the daily chart. A couple key things to mention here on oil. Oil is looking actually bullish. However, if you draw a trend line there, you can see it's still hitting resistance. So now that you've closed above this white trend line, we can actually get rid of it. And basically now, in terms of the oil bulls, they're attacking this next resistance, which you're bubbling up. If you get through that resistance, then you also have this major pivot kind of correlating in the same vicinity. So this $81, $82 level is a massive level. If you can get through that, then you could challenge this pivot high over here. But just notice the degree of trend lines that are just sloping down on oil's price action. It's finding it very difficult to actually make a break just due to the natural resistance that's there. So we'll see. But potentially you have put in a series of higher lows here, and we'll see if oil has the extra momentum and strength to continue through to the upside. Perhaps the Saudi market is keeping a bid under oil because they know Biden wants to fill it up around $70. So the Saudis are obviously essentially doing a call option, and Biden's doing a put option. Obviously, Biden sold from the SPR around this range and lower, driving it down, and wants to refill at that 70. So notice how that 70 has been the floor. Obviously, due to the market front running, obviously probably the Saudis don't want to see the U.S. fill up their oil for that cheap because it's basically shorting the oil market. It would be a successful trade. But nonetheless, we'll have to keep oil on watch. Oil obviously spiking would add to inflationary pressures across all of the energy markets, as well as pretty much every single business in the stock market. So we really don't want to see oil spike in terms of a drastic way. Basically, anything in the 90s is okay. It still puts additional pressure. But if you start attacking that $100 a barrel level, then that's when things get really dicey for the markets again, because it's almost like a form of tightening in the most used energy in the world. Now, let's take a look at Bitcoin, because there is some interesting price action in Bitcoin. Obviously, with Bitcoin selling off yesterday, we were well informed. You can see it's actually having a nice little dip right now. So notice how you just hit this pivot right now as we speak. Literally on this hourly candle, you just tagged that 21.4 level. So that's technical support. If you break through that, then you do have some additional support in this range, but you likely head to this 20,700. The big level on Bitcoin, there's two big levels. The first one is this 20,700. This was your previous pivot before your FTX major collapse. And then your orange pre 2017 high, going all the way back to this pivot in December. So we have the levels. We'll continue to watch them, and we'll just have to take it day by day and price by price. But at this point in time, Bitcoin is looking bearish, and it's probably readjusting due to the fact that interest rates are spiking. So there will be lots to discuss in our next analysis. Other than that, that really gives you a clear picture of the markets from this sense. I'm going to continue to post some weekly analysis. I will be doing an exclusive analysis for members only, which I do think will provide additional market signals. We got a whole bunch of market signals today that I'll be touching base on. So if you're curious and wanting to be informed about that, please definitely check out our website and find out how you can view that material. Other than that, on that note, it was an excellent job trading. I want to say congrats to our members for closing a whole host of trades today. Just running through some of our trades that we closed. We exited our Yang trade for a lovely, lovely over, 10.1%. So that was short China, but basically a beautiful, beautiful move there. We also covered our ABEV for a beautiful profit there. Notice how you got that beautiful technical bounce off of support. So that was an epic, epic short and cover there. We also basically did well in the day trade. We also covered our FTNT short. Look how much that rebounded. We covered at the lows of the session in the pre-market today, right at the lows here. and look at that epic bounce. So a magnificent job on that trade, netting us just over 9% there. And then finally, Disney as well. Look at Disney. We basically covered our Disney for a beautiful 9 point something percent, 9.9, close to 10% as we shorted it when it gapped up in the pre-market. So wonderful job being aware of the technical signals here and using the charts to our advantage. And on that note, I'm going to bid everyone farewell and have a great, great weekend. I wish everyone the best. Please kick back, relax, because next week is going to be just as wild as we approach that CPI print. And if we can take a look at the inflation, US kind of inflation right now, if I pull up that chart, I can type here. Basically, the year over year right now is trading at 6.5%. So, will the market see a decline in that? Time will tell. That's certainly what's going to be the big kicker. Notice how you are coming into some technical support on inflation. So, perhaps you do get a dip, but perhaps it's shading that you might get a little bit of a bounce. And it'll be interesting to see if inflation, we can use technicals to do it as well. But when inflation has that point, that when that tightening cycle really starts to hit, it could roll over in a big way, which typically is something we'll discuss with our members. It's not really a good thing. But on that note, take care, everybody, and we'll see you on the charts on Monday. And keep a track on Bitcoin and a variety of the other cryptos to see how the markets are likely to open on Monday.